Addis Business Talk with Khalid and Marid on Afro FM 105.3. We'll be talking to policymakers, investors, business leaders, and entrepreneurs to bring you the latest development taking place in the Ethiopian economic and business climate, and more importantly, what it means to you.
Good morning, good afternoon, good evening from Addis Ababa. This is Addis Business Talk with Khalid and Merid every Thursday morning on Afro FM 105.3. My name is Khalid Mawi, along with my co-host Merid Bisrat. Thank you for joining us. The show is brought to you by Pragma Investment Advisory, a business and financial advisory firm based in Addis Ababa, along with our partners at 251 Communications, prominent marketing and communications firm based in Addis as well. Now, we're very excited to have Girum Tsegaye as our guest today. He is the CEO of Ethio Lease, Ethiopian capital goods finance share company. Ethio Lease, of course, is a financial services firm that provides its customers with carefully selected equipment on the basis of a lease contract, whereby the customer is the lessee who has a conditional right to use the equipment, and Ethio Lease is the lessor who buys and owns the equipment. Now, Ethio Lease is part of the AAFC group of companies. AAFC, which stands for African Asset Finance Company, is a privately owned U.S. corporation with its main office in New York. Ethio Lease is also the first foreign-owned company with a license to operate in a corner of the Ethiopian financial services sector. Now, Girum comes from a long-standing 20-plus years of professional background in the Ethiopian banking sector, most recently as Deputy CEO of United Bank or Hibret Bank before joining Ethio Lease as Chief Executive Officer. He holds an MBA from the Addis Ababa University. Girum, a very, very welcome to you, and thank you for joining us here on Addis Business Talk.
Thank you, Khalid, for giving us this opportunity.
My pleasure, my pleasure. Now, delving into our discussions, we usually begin with a personalized question as an introduction to who you are as a person, really. So if you don't mind telling us about your upbringing and how you joined the banking sector and what the journey has been like for you in this long-standing experience in the banking sector. And what is it really about this particular sector that you find interesting and appealing to have successfully stayed long enough?
Thank you so much. My name is Girum Tsegaye. I was born and raised in the western part of Ethiopia, which is Jimma, which is commonly known for its coffee.
Yes.
Then I joined Addis University and graduated in management. I would say it was just by chance that I just go into the banking industry. By then, I remember the government has stopped employing directly from the universities, and then Commercial Bank of Ethiopia requested the university to send few graduates, and fortunately I was one of them. I got interviewed and then joined Commercial Bank. I worked in the Commercial Bank for 11 years, from clerk to loan officer to district credit officer, and then up to department head or department manager for training. And then I joined United Bank or Hibret Bank as HR manager, then moved up to vice president for administration and finance, and then laterally moved to vice president operations, which is sort of deputy to the president. I served there also for about 14 years, and then now I'm running Ethio Lease here. The typical points in the financial industry this is very interesting for me as such, because I was involved in almost every activity, I would say, starting from opening a branch to decision in terms of lending, in terms of foreign exchange, availing foreign exchange to customers, and the interaction with all sorts of businesses makes it very interesting. That's what I would like to say about the finance industry.
Very interesting. I would say that's a very extensive experience that you have. I'm sure you have seen the development of the financial sector start from for almost 3 decades. I'm sure we will talk about that very, very soon later on. But let's start talking about Ethio Lease. To give us a background what is Ethio Lease? When was established? What is your mission? When did you obtain your license as an equipment leasing company from National Bank of Ethiopia? And what kind of service you provide to your clients? Before you answer these questions for our listeners, it would be good, like, if you give us a brief description of what it means by when we say equipment leasing and asset-backed financing and how it works.
Okay, thank you. Asset bank or finance leasing, or leasing in short, is acquiring heavy equipment, capital goods, and then leasing it to someone who will use the equipment revenue and pay back the lease fee from the revenue the equipment generates. This is capital leasing or finance leasing.
Mm-hmm.
The unique part of it is, at the end of the lease term, the lessee has the option of purchasing the equipment or returning the equipment. But the lessor, Ethio Lease, for example, we cannot say we don't sell it at the end of the day, because the equipment might have higher value, whatever. We don't have any reason to say we cannot say we don't sell it. But the lessee has the option either to buy it with a nominal purchasing option that was already given in the agreement, settled in the agreement, or the lessee can return the equipment if they don't want to buy it. This makes it different from operating lease and even hire purchase.
Mm-hmm.
Asset bank financing is where you get some sort of finance in terms of assets. Now, for example, Ethio Lease borrows from abroad, but we don't get the money here. What we do is we use the money to buy equipment and then bring the equipment here, so we can lease it out. That is asset-backed financing, in short. Coming to Ethio Lease, Ethio Lease has been under formation for more than 2 years, and it was not easy to come to that level of establishment, because the central bank has very rigorous processes and requirements, and passing all that hurdle, AFC, the typical, the major investor behind, was able to handle all these rigorous processes, and we were given license last year, August 2019. We are just 1 year old now, 1 year young, in fact. And the minimum capital requirement for foreign investors to engage in lease financing is 400 million Ethiopian birr, which is comparable to the 500 million Ethiopian birr to establish a bank in Ethiopia. All the investment comes from AFC, from the US.
Okay.
Typically, what we are doing now is we buy. Actually, we don't buy equipment up front. Whenever there is a potential lessee who requests any capital equipment, we'll look for that equipment from abroad, and we'll see if we can supply that, and do a sort of equipment risk analysis, and then the supplier analysis, and then local distributor capabilities here in the country for all after sales services, maintenances, all these things. And then if we are comfortable to supply this type of equipment on lease, then we come back and offer the potential lessee our equipment, what the lease fee, the monthly lease fee will be, what the final purchase option will be, all maintenances and insurance costs included. We will give them an offer.
Okay.
If he agrees on that offer, then we'll go to lease agreement, and then we order the equipment. That is the process.
Okay, wonderful. As you mentioned, Ethio Lease is the subsidiary, a parent company of African Asset Finance Company, AFC. Could you give us a background? Who is AFC, and how's your partnership work with Ethio Lease and AFC?
Actually, our AFC is an independent company in the US, which is based in New York. That's held by private investors behind them.
Okay.
Our relationship is typically sort of parent company And the whole investment is from AFC. I would say 99.99% of the investment is from them. Therefore, in effect, they own the company here. They own Ethio Lease in short. Our relationship is they are shareholders, partly. They are also our technical advisors. That's a major part I would like to say about AFC, because leasing is typically new in Ethiopia, particularly when coming to this equipment management, even lease analysis, equipment risk analysis. All these are new for the Ethiopian financial industry. They are also our major technical advisors behind.
Now, interesting, Girum. Now, Ethio Lease being the first, of course, equipment leasing foreign-owned entity to operate in Ethiopia, you sort of mentioned a bit about challenges faced with regulators to obtain the license. Other than the high capital requirement to establish this business, what would you say are some of the nature of the challenges you faced, both initially obtaining the license from regulators and post-establishment, some of the major challenges you're facing in doing business? And would you say you are getting the necessary assistance from government partners?
Let me come to the first question first. Then,
sure.
Getting license from central bank, the process is very long. That is one. They want to go in detail through your business plan, whether you have office or not, and whether you have insured your whatever computer and desk you have in the office, and whether you have your name posted on the wall of the office, and all these details are more. They want to see the details or the profiles of the proposed board members. Actually, they go through your memorandum of understanding, articles of association, almost everything. And they have to come now and then, and the process takes very long. In addition to this capital, the capital is also not that small amount of money.
Yes.
The second one is they have all sorts of directives in place already. Actually, when we start, the earlier directives were very difficult to implement, and we have to fight with AFC. Together with AFC, we have to write several letters to the governor. So some of these points in the earlier directives would be changed, because some of the issues they raised, some of the points they always raised during these discussions, they were not written. We want to confirm whether it is written, whether we can have a written directive or not, because some of the issues were not covered in the earlier directives, and that takes too long. Maybe now it would be relatively easier. Key point then and even now is you borrow any fund from the Ethiopian local financial institutions, or you cannot borrow from Ethiopia anyway. Whatever you have to invest, whether it is in terms of equity or in terms of loan, it has to come from abroad. This makes it very difficult. One. The second point here is whenever you borrow from abroad, you are not allowed to borrow more than 60% of your asset. If you plan for 100 million investment here, you have to bring 40 million in equity, and then you borrow 60 million in terms of loan. This is not easy. Industry you may be investing in, 40% equity investment is very difficult. It's very difficult to make it practical. That is, I think, the major challenge still today. We are still looking for a central bank, but that is one of the major challenges we're facing still now. If you go for commercial banks, for example, locally, they're required to have 8% capital. 90% of their fund or their assets can come from borrowing, in effect, from deposit from customers. Compare this to a leasing company, foreign-owned leasing company, coming up with 40% of it is equity. That's a major difference.
Addis Business Talk.
I'm sure that also being the first one also has its own perk, being the first foreign-owned equipment leasing company. Uh, I know that when you form Ethio Lease, you have conducted a year-long market research before you enter the market. Could you tell me what were the main findings of the market research you conducted in terms of identifying the market gap here in Ethiopia to start the operation here? And also, what is your unique selling proposition in terms of as a company? I know that as per the National Bank of Ethiopian data, there are 5 capital goods financing companies, local companies here. What makes you different? What do you bring different to the table here?
Let me start with a study. Actually, detailed study has been conducted and submitted to central bank also, as I said earlier, as part of the long-term financial plan or long-term business plan. And you need that detailed study even to understand that there is a market gap. Go to the agricultural sector, for example, Ethiopia has been far behind compared to neighboring countries. We don't have that mechanization equipment in place. There are only few tractors are in the field 2 years, 3 years ago, and that is very easy to understand. Go to the medical sector. Many of the hospitals, many of the big clinics, medium clinics, they don't have this heavy medical equipment, including CT scan, MR, you name it. If you go to the manufacturing industry, for example, obviously Ethiopia is growing. The manufacturing sector is literally on its infant level. Therefore, there is big opportunity to engage. Maybe construction is partly being served by operating lease players. That is still them, given their capability here, that most of them use second-hand equipment, all these things, compared to this and availability of these big construction companies in the country, though they are still facing this big competition from the Chinese companies, but still they want equipment. The demand is there. And typically, the demand is very high because there is very huge foreign exchange shortage in the country. Even when you have adequate local currency here, even when you can borrow from a bank, you cannot easily import them into the country because of the shortage of foreign exchange. And that shows the demand is very high because we are not producing any of this heavy equipment locally. The only way you can get it is you have to import them, and this foreign exchange is a key problem. For Ethio Lease, our proposition usually is one: we are very efficient. We cannot compare ourselves with the small companies here. There are small companies dealing with leasing, but majority of them they deal with small equipment like bakery equipment and these things, which are very small in value also.
I see.
We deal with heavy equipment generally. That is one. The second one is we have our own foreign exchange source. As I said earlier, whether we borrow from abroad or whether we pump additional equity, both comes in terms of foreign exchange. We can use this foreign exchange to bring the equipment into the country, which will not take us long time to deliver any equipment after signing the lease agreement. These are our major, in terms of analysis, in terms of dealing with customers, in terms of handling lease requests, lease analysis, lease approval, we take just a few days. That makes it very fast, very efficient, and as I said earlier, we can easily import. We don't have to wait at any of the banks to get foreign exchange. This makes us number one in terms of leasing.
Yeah, that's very interesting, Girum. Thank you for that clear outline of the kinds of gaps that even we ourselves in our industry are identifying, and the kind of solution proposition that you bring to the table is definitely something that has brought about a certain level of excitement, as we have seen, thanks to Ethio Lease. kind of a client service related question. This is a repeatedly asked question from many of our listeners. You've touched upon it a little bit about the process of applying for lease financing at Ethio Lease. If we can bring it to sort of operational level, assuming I'm a potential client interested in using your leasing services, how do I begin about applying for your service? What's your application criteria, the screening process, the things that I have to bring forward as requirements to obtain lease financing, the applicable interest rate, or any other payment scheme that you have, the leasing period, what does it look like? Sort of a general provision of to allow a successful transaction with a client, basically, is what I'm asking.
Okay, thank you. In terms of applying, we have this platform on our website. Preliminary applications can be sent directly through the website. That is one point I just would like to just. In terms of requirements, we usually want applicants to have some sort of knowledge in handling business. It should not be necessarily big business, but at least these people who would like to work with us, we expect them to have some sort of business management knowledge, wherein we go through their account statements and all these things to try and see whether they would understand business, they would understand how they could manage cash flows. And even we ask people to come up with a sort of cash flow projections for the equipment they need. And this is sort of experience requirement. We need the potential lessee to have a license, at least business license. And for some sort of equipment, we require investment licenses because there are these duty-free issues and all these things. The other requirement is if we agree on the offer we propose, there is a security deposit we require to be deposited in our account, and that would help as a fallback if in case there is some gap in terms of lease fee payments and whatever. Mm-hmm. It's usually about 25% depending on the type of equipment. Actually, after doing some sort of credit analysis, if the risk related to that specific individual is very low, the security deposit would accordingly be lower. If we think that the payment risk would be very high, accordingly the security deposit requirement may increase, but on the average it's about 20 to 25%. We require that security deposit before we sign agreement. In terms of lease terms, usually this also depends on the type of equipment. For small equipment like farm implements, all these things, it's about 2 years. But the common for combines, for tractors, for generators, all these things are about 3 years in general. But for medical equipment, for example, we are entertaining a lease term of 5 years now because these are very heavy and the value related is also very big. Mm-hmm. We don't have that specific interest rate as such, but what we do is we have this embedded financing cost because we finance the equipment from our own fund. That will reflect in terms of lease fee we offer to the customer. What the customers are doing these days is they just collect our offer, they see how much monthly fee we are requesting, and they compare if they buy it directly by getting some sort of bank loan, and they compare the current purchasing price, whatever financing cost they would pay to the banks, they add up this, and then the final purchasing option price given by Ethio Lease, and adding all this and comparing it to our lease fee, that's how they do their decision. And many of our lessees are very happy so far.
Yeah, that's a very interesting outline. I hope this will be helpful for many of our listeners as well. Kind of as a follow-up question, you've touched upon how the initial request for machinery and capital goods usually comes from the potential customer, him or herself. But I imagine as kind of a subsidiary of an American entity, Ethio Lease may have a set of equipment compliance standards and important codes of ethics that you uphold. If you can perhaps share the ones that you deem worth knowing to potential customers, and if there are, would you say there are any particular regions where you usually source machines and other capital goods from, or could it just be from anywhere as long as those standards are met and some of the equipment risk analysis, supplier risk analysis that you've mentioned about is compatible with yours? How does that work?
Thank you. We don't have any specific source for equipment. Actually, it's not Ethio Lease that identifies the source as such. It is a lessee who identifies potential suppliers for certain equipment they want to lease. That is the process in general. Whenever a lessee comes with some sort of equipment, we also ask them if they have potential supplier that they prefer. What we do is, once we get that proposal from them, we also try to see if there are better suppliers in the market. We have contact with various OEMs, original equipment manufacturers, in Europe, or usually in Europe in the majority of the cases. And what our requirement is, generally, we want to make sure that this equipment is reliable equipment supplied by a very known OEM, because we want the equipment for a certain period of time until end of the lease term. If anything wrong with the equipment, that would be our headache. Therefore, we have this simple criteria: durability, maintainability. We also focus on availability of local distributors for that type of equipment. For example, when it comes to maintenance, after sales services, if there are trained people to maintain this type of equipment, if there are companies that bring or that import parts and maintenance capabilities, training, all these things, and we try to assess that first before we engage in any lease agreements. In effect, if we get durable equipment supplier, very reliable equipment supplier, that is one, because we have to go through this due diligence process also, because we are in effect a US company. Whenever we buy anything from any OEM, we have our own process of this due diligence. They have to pass that. The equipment is durable. We need to have somebody or some company who is capable of doing the maintenance locally here. These are the basic criteria. What we do usually, we don't have any stock or whatever. We don't buy anything upfront without getting any lease agreement with a specific lessee. We don't have any specific source of equipment. We don't have any specific catalog of equipment. What we do is, once we go into lease agreement with one lessee, then we tend to propose that equipment to whoever may come. But that doesn't necessarily mean the lessee has to take that equipment. We always offer that as an option to whatever the lessee proposes. That is the process in short.
Wonderful. Ato Girum, before I ask you my question, I was wondering to ask you this. Would you consider to give equipment leasing, such as like heavy industries like mining? Investors want to invest in mining and they want to buy the mining equipment, glass factories that have big machines, furnaces, or beverage companies that they want to build a beer factory. Would you consider this kind of companies to as part of your service? Because the machine cost could go up to $50 million, $40 million. Are you sector agnostic in terms of this?
What I would say is we are very young to engage in that kind of investments for now.
Okay.
There is a central bank requirement that hinders us from going to that. We are not allowed to lease equipment that has a value of more than 25% of our equity. Currently, for example, we have this 400 million Ethiopian equity. We cannot beyond $3 million in effect.
I see.
So one of the requirements by the central bank, given these hindrances and that we are very new to engage in very high value equipment, we are not yet, but we are in the process. What I would say is, we have to train all our staff and go through all these equipment management processes, and now we're coming on board.
That's very good.
As you have seen it earlier, we are supplying these generators, combiner harvesters, CT scan, MR. These things are partly, their values are not that big so far, and partly they are very easy to redeploy if it is necessary. If people do not pay us, what we have is, we don't have any collateral, by the way, except the equipment we leave out. Because of this, if people are not paying, what we have to do is we just reprocess the equipment and then lease it out to somebody else. Go to, if you engage in very specific type of heavy equipment, it might be very difficult to reprocess. Even if you can reprocess it, then getting somebody else to lease this specific unique type of equipment may not be that easy. Because of we are looking into this in detail. We are trying to see how we can manage this, if this type of risk of not paying lease fees happen. We are on the process yet.
I'm glad to hear that you are in the process, because here at Pragma, I and Khalid, we face different requests from investors all around the world, because as you know, the country is planning its 10 years economic reform plan. One of it is one of the key pillars of the sector is mining is one of it, and also and investors want to know this. I just want to cover that. That's very good to know that you're working on this, and hopefully we will cross that bridge very soon. Let's come back after the commercial break. Stay tuned.
Pragma Investment Advisory, a financial and business advisory firm focused on promoting risk-adjusted returns and long-term value-yielding investment opportunities in Ethiopia. Pragma accounts for critical value-add propositions to its clients' portfolios by delivering on a wide array of solutions ranging from deal origination and closing to market entry strategies, transaction advisory, project management, and handholding. For further information, our website is pragma-advisory.com. If you have any questions, please email us on info@pragma-advisory.com.
Addis Business Talk.
Moving on with my question, right after your establishment, Ethio Lease announced that you signed a memorandum of understanding, MOU, with the Ministry of Agriculture and ATA, Agricultural Transformation Agency, to facilitate the mechanization effort done by the Ministry of Agriculture. Could you tell us more about that deal? I know that, and I recently heard that you have transferred those agricultural machines to the farmers. Just tell us a bit more about the deal and how the process worked, and was your clients very satisfied?
The MOU typically is between Ethio Lease, Ministry of Agriculture, and ATA.
Okay.
ATA's goal is to support unions that have several cooperatives under them. They give them sort of technical assistance in terms of business management, in terms of technical equipment maintenance, all these things. They are there for technical support. The Ministry of Agriculture is there to facilitate the land holding related issues. Because if a farmer, our farmers, Ethiopian farmers, they have very small plots. Unless you put these plots together, it's not to implement this mechanization. Because of that, the Ministry of Agriculture is also involved. This is the agreement in short. Our role in there is to assess the capabilities of the unions who apply for equipment, and then get ready the equipment before in time for this seasonal farming activities, including the plowing and the seeding and then the harvesting. The detail of this memorandum of understanding. Accordingly, we are dealing with many unions. These unions are big companies in effect, because they have many cooperatives under them, and the cooperatives have different various farmers below them. It's a sort of thousands of farmers coming together in one union. Because the small farmers cannot buy any heavy agricultural equipment paying upfront the value of the equipment. Now we simply supply the equipment on lease for the unions, so the unions can address specific needs of these farmers and the cooperatives. In effect, the unions are like contract farmers. They lease the equipment from us, and then we operate throughout the farmers' land, and they get paid, and they pay us also. That is the process in short. And recently we have delivered more than 40 tractors for individuals in unions as well. And also for this summer harvest, we have already delivered 16 combine harvesters. Most of them are for individual farmers, actually, individual farm contractors. And we have also signed agreement with more than 40 potential leases, and we are importing more than 40 combine harvesters for the winter harvest.
That's very interesting, Ato Girum, that Ethio Lease is playing its part in trying to solve this long-standing issue of infrastructure and equipment shortage that the country has been facing, specifically in agriculture. And the fact that the agricultural community probably was one of the first customers at this point of Ethio Lease shows that chronic shortage of trying to mechanize agriculture, thanks to all these equipments, is something that I think it's very exciting for Ethio Lease to play that pivotal role. Kind of related to some of the other environments and areas that you're involved in. As we spoke about this earlier before the show, I remember being present at the launching date of Ethio Lease last year. I can recall a number of MOUs signed with a few businessmen and women on the spot even. I'm just curious, how would you describe the feedback coming from the business community in Ethiopia? Were the company phones constantly ringing and your offices crowded in the following days? And how have you been accommodating? Have you been accommodating more projects so far other than those in the agricultural sector?
As you said earlier, there were many people coming to our office, and as I said, some of them did not have this business know-how, and some of them did not have this licensing requirements, all this. But for those who have real demand and who understood what leasing is, we were entertaining them. Not only we were not in the agriculture sector, actually we were also in the energy part. We have supplied some 19 generators, standby generators, which are very big, something like 500 kVA and more. These are big generators. We have also, there were also medical people. We were talking to several hospitals and clinics which are in Addis and even outside of Addis. This process is relatively taking longer time because the pricing issues have their own contribution. The maintenance issues are very critical here, as we have observed in many of the hospitals, even the big hospitals, government hospitals. They have this big medical equipment, but most of them are not functional because of sometimes very minor issues, but that has not been addressed by the local distributors or whoever is supplying this equipment. And because of that, we have to wait and see the capabilities of the local distributors here and the option of getting extended warranty from the manufacturers themselves, because what we have seen in the medical sector is maintenance is very crucial. Maintenance and actually supply of these small items and issues and parts. Because of this, we were not that deep in the medical sector yet, but we have, for example, supplied one big CT scan to a hospital in Hawassa. And we have also signed an agreement with one big company in Addis to supply one big CT scan. And I'm talking about $1 million equipment here. one MR, they are both very high value, and we are.
Absolutely.
But as I said earlier, we have been talking to and discussing with many people coming in, particularly from the medical sector, for example, and it's just now that it's getting ready for delivery. The other part is this type of equipment, medical, for example, you cannot get them on the shelf. You have to order them, and you have to wait for some time until they are manufactured and ready. All these things are also part of the issue. Many people are still today, many people are coming, many people are applying online. And as I said earlier, maybe sometimes it's difficult to address just one unique equipment, because we have to go to all this due diligence of the supplier, and which is very costly for us. And we need to have some sort of demand for that type of equipment. You see, when we have 3, 4, 5 demand at a time, then that will be very cost effective for us. And that's how we're doing. That is why we are not yet deep in the other sectors as such, though we have flying certain equipment.
I see. That's very encouraging to hear. I mean, those machines, though, the MRIs and the other medical equipment are very much needed for the health sector. I mean, considering we're living through a pandemic. At the group, how is COVID-19 affecting your operation, and what kind of mitigation effort are you taking as a CEO of the company?
I would say COVID-19 has not as such impacted us as such.
Okay.
As a financial institution, as you can see, all the banks and insurance companies, we're still there, still functional. As you can see, agricultural equipment, for example, they have to come anyway.
Yeah.
The farmlands have to be covered, and the products have to be harvested anyway. Because of this, we are not that much affected. But if you go to the manufacturing sector, for example, there were companies whom we were dealing with, but still they were hesitating to come back and sign agreements. All these things are because of COVID. That part, we are being affected. The impact is not that big yet. We're not sure about the future. What we're trying to do is actually, if a complete lockdown comes, for example, that automatically affects us, because we have to travel around, we have to go to all these government offices and handle all the bureaucracies, even delivery of equipment, maintenance, all these things are very difficult jobs. And if the COVID impact comes to the level that lockdown may come, that may affect us seriously. But still then, we were trying to put in place some sort of mechanisms that we can still continue operating. That's what I would say about COVID-19 now.
Now, Girum, as you're operating in the Ethiopian financial sector, again, which makes it peculiar in your case, is being supplemented by foreign capital. I'm just curious, what would you say is the importance of opening the country to foreign investment, such as AAFC, with regards to its potential to boost the economy of the country, providing the significant financial gain for the country as well? And how far does it go in addressing equipment and what you mentioned earlier about the Forex shortage, to provide easy access to these much needed equipment?
I would say that goes without saying, because opening up the country to foreign investors in general, and the financial sector in particular, in terms of leasing, we're getting this equipment very easily, which is very high contribution to the country. There is also risk related to it, because this foreign exchange, it will come for some time, and then after some time it has to be paid back. My personal opinion is, I'm very optimistic. 3 to 5 years, this chronic shortage of foreign exchange will somehow get softer and softer, and we would be able to pay back whatever is coming in. And that has to be also considered in opening up your financial sector. Actually, it's not only a matter of getting the money into the country, but also it's a matter of paying it later on. That's also an issue anyway. But opening up, I think, would be more advantageous. It's a matter of time. We cannot wait forever and then start from the scratch later on. Our competitors, our neighboring countries, they are all there to take advantage of whatever capital is coming from the Western and the developed nations.
Yes.
And I think that's very important, and it will also pay off.
Absolutely. I couldn't agree more. Now let's shift gears and let's talk about generally about the financial sector, which you are very well aware of, and I think I would say it would make you a pundit in the sector, considering your 20 years plus experience in the financial sector. As you know, there's when we talk about the Ethiopian financial sector, there is two sides of argument that should we open the financial sector for foreign players so that foreign banks can come here in Ethiopia and operate and provide loans, and what kind of economic benefit Ethiopia could reap out of this opening. And also opening up the capital account also will help a lot of private sectors in terms of getting a quick access for the forex and import required materials and machineries in order to become productive. And also there is the other side of the argument that we should not open the market, we should not open the financial sector. They would point out that like the local players have to be given enough time to develop themselves so that they would be competitive enough as per relatively to our neighboring countries before we open the financial sector. I just want to know your opinion on this, because I'm sure you have a very insightful understanding regarding this, and I just want you to lay out for me the pros and the cons, and what's your take on this?
This would be my personal opinion, not that of Ethiopia.
Yeah, of course.
And my personal opinion is it is even late to open, because see the local financial institutions, they have been there, even the private ones have been there for the last 10-20 years, and I think it is time to even for themselves to collaborate with international financial players and develop themselves. It's not about only being profitable. It's a matter of supporting the country's investment. It's a matter of getting this foreign exchange in time. It's a matter of even for the banks and the financial institutions to develop themselves, to have this international expertise. We are not working any banking in Ethiopia. We are just depositing, collecting deposit, and just lending money. That is not banking. This financial intermediation has very long process where we don't have this stock market or secondary market. All this go together.
Yeah.
I think it is time to open the financial sector. I was even surprised this afternoon. I just heard on the news that the central bank has allowed banks to borrow from foreign banks, whatever.
Yes.
This should have been there many years ago, because banks are banks. They can manage their cash flow, even in terms of foreign exchange. And it has been blocked for a long time, and recently they are allowing it. And my personal opinion is we open it up.
Yeah.
We open everything. Actually, it has its own phase. For example, the central bank could allow foreign banks to collaborate and work and invest in the existing banks, or a sort of 50-50 ownership. And that's how the experience and expertise would come into the country. And that's how we can encourage international players, international investors to come and invest in the country. That's my opinion.
That's great. Like, just as a follow-up question, you mentioned the capital market. I don't know, you had the chance to go through the draft proclamation to establish the first Ethiopian capital market authority, like our SEC, Securities Exchange Commission for the America. The same thing here. The authority would be established under a proclamation. And National Bank has been, the National Bank and also the Council of Ministers are currently discussing on the proclamation, and it will be submitted to the Parliament. Under the proclamation, it says the authority will be responsible to set up the Ethiopia's stock exchange, and it has it's all the requirements. It puts all the requirements needed. But I just want to hear your professional opinion in terms of having it now, having the capital market. What kind of impact is it going to make in terms of your business and in terms of generally to the Ethiopian economy, considering your experience in the banking sector?
I'm afraid I did not go through all the documents throughout, but I've tried to scan some of the parts.
Okay.
I think it is timely that we start because we have the informal market already. All these banks are raising funds from individuals, selling shares, and the interchange between one shareholder and the other is already there. I think that would be very difficult. My major point is we need that strength of the authority to manage the traders. That's the key point, I would say. And I have tried to see the requirements put there to be a trader and to involve in that type of market. And I think that would be very good from my perspective. And I am hopeful also, even for the financial sector. The financial sector is now in a very closed loop, and it's difficult to go out and sell shares whenever you want, to go out and get some sort of liquidity whenever you want it. And that, I think, would be resolved with having this type of secondary market in place. As far as the government and the central bank are very strong in managing it, in managing the players behind that. Actually, the IFRS based reporting is already underway. And given this type of preparations, I think it's time to start it now.
Interesting, Girum. Let me try to relate my next question to what you said earlier about some of the kind of weakness of local Ethiopian banks, especially if they're not consolidating either with each other or if they're not working along with other foreign financial institutions. But you may know, of course, a number of I would say national economic reform plans and subsequent regulations have been introduced by the current administration over the past 2 years or so. I think a case in point would be the homegrown economic reform agenda, doing business initiatives, the recently revised investment regulation that will now, we anticipate, open up a number of key sectors and industries to foreign entities. My question is, would you say Ethiopian banks have the necessary financing capacity to accommodate what we anticipate to be some growth in investment appetite, both from foreign and domestic investors? And if so, what are those weaknesses that you would point out, because you've been a long-standing banker in Ethiopia? But then another sort of question on the other side of the fence is, how would you say Ethio Lease is planning to navigate these changes to maintain competitive advantage, especially if more equipment leasing institutions join the market here?
That will be a very difficult question. Generally, given the overall reform and the 10 years plan the government is pursuing, I think the capabilities of the existing financial institutions to support all this will be very limited. That is why I'm saying the sector has to be opened up, and also the expertise to deal with big international players coming in encouraging the FDI coming in. The banking sector has to develop a lot. That was my point earlier. The current reform, as we envisage it from now, 10 years from now, Ethiopia will be a very big country. The economy will be very big. And the current financial the financial institutions as such, I don't think they will be able to support that, both in terms of availing funding in local currency and foreign currency, but also in terms of expertise. Dealing with these sophisticated international investors is not that easy. In addition, in terms of Ethio Lease, actually, we are doing well for now, as long as the availability of foreign capital is relatively good, because there are lots of capital sitting in Europe and the US. Borrowing that would not be that difficult for now, but as we grow up, we still need central bank to change its directive, so we can also get some sort of funding from the local market. Mm-hmm. When you borrow from the local market, you can easily pay it in birr. That's also one of the issues, and we're expecting this financial sector opening up actually.
Wonderful. I think you touched upon my next question in terms of where do you see Ethio Lease in the next 5 years? But you sort of touched upon it. So just give it a little of elaboration on it, and because with the consideration of I'm sure you'll be following up the discussion of the Planning Commission is preparing a 10 years economic plan, which laid out, and the ministers are discussing over it. How are you planning to navigate through the change that is about to happen, and the plan is going to bring, and what kind of the priorities are you taking right now, or are you about to take in the next 5 years?
Actually, in terms of this long-term plan of Ethiopia, we're not yet there. We know that the discussions are going on, but we're not close. But still, as Ethio Lease, our plan is, given the demand in the country and whatever we have been discussing earlier on, the gap in general, our plan is to go far in the coming 5 years. Anticipating to see portfolio of something like $1 billion, sorry. That's what we're anticipating actually, given the current trend, the demand. As I said earlier, we were not engaging in this big high value equipment so far, but we have already concluded our risk management perspectives in terms of managing this type of equipment. In 2-3 years, we have to go far to $200-300 million, but in 5 years, our plan is to go up there to at least $1 billion. But there will be many issues actually. This is a general plan. Implementation will follow. That requires many scenarios to consider. As you said, the reform is already under process. The long-term plan is already there. Given this, we think that partly the financial sector would also open at least for certain type of certain level of investment. Therefore, we are anticipating that. What we're doing is now we're trying to establish in certain verticals first, so we can be efficient and very competitive in that area. And then as time goes, we're engaging into the other sectors as well. That is how we plan to see and win if any competition comes in terms of equipment leasing.
Wonderful. That's very good to hear. We wish you all the well. So on that note, Ato Girum Tsegaye, we would like to thank you to come on our show to talk about Ethio Lease and your operation, and to talk also about the financial sectors. And it was pleasure to have you on, and I'm sure our listeners find it very insightful, very encouraging to make their investment here in Ethiopia. And we'd like to thank you.
Thank you so much, Khalid. Thank you so much, Marid, for giving us this opportunity to speak out about Ethio Lease.
Thank you very much, Ato Girum.
Pleasure.
Addis Business Talk.
This has been Addis Business Talk with Khalid and Merid every Thursday morning from 7:30 to 8:30 on Afro FM 105.3. For important updates, follow us on Twitter. Our handle is @TalkAddis. On LinkedIn and Facebook, simply search for Addis Business Talk.
Addis Business Talk.